Alright, so let's go over 4-hour and daily structure. This is very important to understand, especially on the pairs that we're trading, which are EURUSD, GBP/USD and gold. 4-hour structure and daily structure is very, very important. For that, we want to look at breaks of structure and also liquidation wicks, like I told you guys. So it's very, very important to understand how the candle closed and how you can anticipate what the next 4-hour candle or daily candle can be. Let's take, for example, EURUSD. This setup just happened. I'm gonna show you an example of how you can use daily and 4-hour structure in your favor. So you see, we've been trending down for quite a while on daily. If you look at daily, we never had any change of character or breaks of structure until we reached this point. Even going down on the 4-hour, same exact thing. We only had break of structure, retest, break of structure, break of structure, retest, break of structure. You see how healthy this downtrend has been until this point where we saw order flow switch from bearish to bullish. So first sign was daily candle closure. So because we are trending down, we need to wait for at least in this type of situation when we're trending down or up for more than a week, let's say. So I think this was more than that. It was around 2 to 3 weeks, I think. Was 30 days. So 1 month we basically had a downtrend. When you have something like this, or even an uptrend, same as here. When you have something like this, you need to wait for daily confirmation. You see how clean EURUSD has been all year. Even looking at this bullish push, daily time frame and daily candles respected perfectly. High, low, a new high, a new low, a new high, a new low, a new high, a new low. Here we failed to make a new high. We created a low and then we started to go down. Same thing on the 4-hour time frame as well. You see how healthy this uptrend was. So very, very nice until here where we failed to make a new high and then we started to go down. It's very easy to identify by using the trick that I already told you. So basically removing wicks, and you can see how clear structure is, especially here and then here also. Here it helps with removing a lot of noise, because price came into a weekly area and this daily demand zone. See the weekly area where we came in. We need to wait for a daily change of character. So for that reason, we need to see a strong push above a previous high. So here with this daily candle, see how we had a high, a low, the high here, and we are supposed to create a new low, but price reversed, took out this high and then came back down. And this is where candle closes are very, very important, because if this bearish candle would have closed below this candle, then that would mean price is gonna head down. Instead, what happened is price closed above this previous low, and the next candle you see how big of a move upside was. So it was very, very easy to predict, very easy trades to take, and I'll do a breakdown in this video as well, because this is a trade I took. 4-hour, let's see 4-hour. You see the perfect change of character here. We took the low aggressively into the zone and then we had the 4-hour change of character. Even here was a smaller change of character because this also took the low and then it took the high and then another break of structure. So price returned to this area, which is the flip zone here. And you see the move up, which was around 100 and something pips. Very, very clean. But if you add wicks, then you'll see it becomes a little bit harder to understand. Why? Because see here 4-hour, a lot of wicks. People tend to lose themselves when there's a lot of wicks. They don't see clear picture. But for me, ever since this daily close, because we took the low and then we took the high, which was also on the 4-hour. So let's mark it here. A strong bullish close on daily time frame indicates that price may start moving to the upside. And then basically you have to wait for a retracement, and then you see the candle closes, which on, if I turn on the wicks, you see a lot of rejections to the downside. So you see one rejection, second rejection, third rejection, but the bodies of the candles closed at the same level, which is very, very important. And from there on, next candle was a big bullish move, which was basically coming. But looking at this data, we can anticipate this candle to happen based on our trading days. It was Thursday, so Thursday, big moves, and also we had news, so it was a perfect opportunity for price to move to the upside. 4-hour had a change of character here, exactly as I told you, which was also daily. Price came back into this demand zone that created a change of character, which was the flip zone, the 4-hour, and then it even gave additional confirmation. So another change of character. This price has been going bearish, another order flow switch, mitigate the low, and then it played around in this area before finally moving to the upside. Even if you enter on the first touch and basically cover the low, still a 1 to 3 after 2 or 3 days. Which is very, very nice. But let's work down on the entry. So after seeing all the data and why daily and 4-hour structure is very important, then we can work down on the time frames. So 1 hour, we waited for the pullback. Here we had a nice little push. Here is where price gave a fake out, basically a fake SMC trap. So let's talk about that also. A fake smart money trap is when we create liquidity because we don't have liquidity. So technically, because we had the confirmation here that we go long, we had a pullback, we had a change of character, and then we didn't have liquidity to be taken before our POI. So for that reason, price gave a smart money trap. So our entry would have been somewhere around here, and you see price gave a nice reaction and then it liquidated the low. So if we work down the time frames more, 50 minutes, even here you see we have the 50 minutes. This is a perfect example of a SMC trap, a smart money concept trap. Why? Because people see confirmation, people see this big move to the upside, and then they mark the last down candle. They mark the POI, they mark the order block, and then they take a trade either at the start of it or at the 50% of it. So if you take out the 50% and then they cover the low, price does go into profit and then it melts down. So depending on your stop loss, you could have taken a profitable trade or just end up break even or in a stop loss. But when I see something like this, you need to basically think outside the box, right? You need to think outside the box and ask yourself, what are the other 90% of traders doing? So you're watching this setup, but 1 million more traders are watching that. They're trading the same concepts. They're watching the same pair. What are they doing? They're probably waiting for price to return to this area and then take a buy based on it because it looks very clean, right? But when something looks very clean, usually that's a point of liquidity. A very, very important lesson that you need to remember. So when price came here, he didn't take any liquidity, only had a little bit of a, let's say, trendline liquidity, but not that much. Was a bigger distance towards our POI and also very, very clean. So price gave a nice reaction and then it came down to manipulate the low. After that manipulation, we can then either look at the next session because this was actually New York. So I would probably take an entry, a more aggressive entry here if it was me, but let's see what happens after. So after that, what happens? I don't know. Let's go here as it's easier to watch. After this, you see price came back up. So 1 hour was forming bullish again after the 4 hour and daily time frame guided us towards this buy. So we just need to execute a buy. So every chance you get, you basically execute a buy. So first good trade that happened was here. You wait for London Open. You see London Open take out the low and then come up. So after you liquidate this low, price came to this New York low, which got respected. I executed a trade here. This was on a challenge account, which I basically passed in one trade. And then my first target was Asia high. Asia high because that's the first point of liquidity, but you could have basically leave it to run more. You see how price did go up. But the reason you can enter riskier on this trade. So usually when price, let's say price was still trending bearish on daily and 4 hour time frame, this would have not been a valid trade because price was trending bearish and would have just gone down. But because we had the 4 hour and daily confirmation here, the daily and 4 hour structure that's indicating us that price is ready to move up, we may execute riskier trades basically, because even if we use the Fibonacci tool to get that optimal trading range from the low towards the high, you see, nice, it was around that area. So everything that happens inside this area, which is also the discount zone, so you can also draw this. This is a premium and discount tool. I didn't really make a video about it, but what basically means you have 0%, 50% and 100%. When you have a move like that, you can either use the Fibonacci tool, same thing, or you can use the Gantt box to mark premium and discount. Premium is above the area and discount is below the area. So everything that is in discount, because we had a daily and 4 hour time frame, which is a very strong time frame that really indicates us and gives us a lot of confidence for the buy. Anything that's below the discount area, we can basically execute on. Because I don't really like big stops. As I said, we could have just executed here and leave the trade run, let's say cover this low or even cover this low. It was a big stop loss, 50 pips, right? And then target a 1 to 2 or 1 to 3. Very, very hard to, I don't like to trade like this. So I like waiting for proper confirmation inside my areas and take a trade with a normal stop loss, 10-15 pips, and then target a nice move. So you see, it tapped right into this zone. We could have executed there. As I told you, this first would have been a nice, let's say, use of 15 pip stop loss. Have been a very nice 1 to 2, or even 1 to 3. But let's say 1 to 2 with this move. And then price came back down again. Still in discount zone, you see? Still inside that 0.7 area. So very good area to take trades on. Because again, you have the 4 hour and daily time frame behind it. So if daily time frame was still trending down like this with no proper confirmation, then that trade would have been very, very risky and most likely not playing out. But now with confidence it gives us, that's why it's important. It gives you a lot of confidence on a trading idea and a trading bias. Because that happened, I could execute multiple trades. So every time I saw the opportunity in this area, price came there, I looked for a setup. So let's make this a little bit smaller, something like this. So the trade today was taken again based on the same thing. So here was another entry. Price retested, I could have entered and covered the low more aggressively. So London Open came in, could execute again 10-15 pips. I will show you the exact way you can take trades like this when we are just putting everything together, and showing you the exact way I trade. And then for this, because we already took liquidity multiple times, I would have just targeted another high. So this high here, there, which was also the 4-hour high, I guess. Yeah, the 4-hour high. So our target there would have been a 1 to 4. Price pulled back really aggressively, but you see 1 hour, very important to watch higher time frames, especially smart money traders, but usually all traders, ICT traders, they really lose themselves on the lower time frame. But if you watch the higher time frames, 1 hour, 4 hour daily, you really see very clearly what's happening. So if you miss this, you had another break of structure on the 1 hour, another big confirmation. See how big of the move was happening here. And then when you have a move like this, what you can do is basically wait for the retracement. To mark the retracement, I like to, when price is really ready to move in a certain direction, when you really have every time frame aligned from daily all the way down to the 1 hour, I like to look for more aggressive entries. So I like to look at the area that it broke from. So here we took the low, we came down here. So this was the high. After we take out this high, I'm looking at the area here. So I'm marking that area to look for a potential entry. So let's say I'm marking something like this, getting the Fibonacci tool, right? Perfect retracement, waiting for retracement inside the area. You see how very good it fits. Then moving down the time frames. 50 minutes, we have a very nice candle here, which was ranging a little bit, and then it pushed very, very aggressively. So I can do something like this. It's also inside my 0.7 area. Very, very nice to enter. Price moves up. Instant pullback. Here you can either wait for more confirmation, because it was end of the day, I would have just entered. Again, when price is giving a big move on a certain day, so this was almost 100 pips, 70 pips. When the day is ending with a big pullback, usually Asia session picks it up and goes in the same direction. So I would have entered here. When price came there, have again a 15 pip stop loss, because I have a lot of confidence. Price is moving up because I had the daily and 4 hour time frame. And then from here, first target can be the next break of structure, the next high, which is a really easy target to hit. And you see how nice it moved, and then it moved towards the next point of liquidity, which was this high on the 4 hour. You see how nice it was. If you target that, 85 pips, 1 to 5. A really clean trade today. My entry was basically happened in London because I missed that entry. So the next point to enter, again, when you really know price is gonna move, because you had all the confirmation, you had daily, 4 hour time frame, 1 hour time frame, liquidity taken, breaks of structure. You had news the same day. You also had the order flow really bullish. You had a nice setup here. Everything was lining up, right? It was Thursday. Thursday is one of the best days for moves. So everything was lined up. So you just need to execute. You don't need to look for the perfect entry with a small stop loss, or I don't know, you don't need to wait too much. You just need to execute, even if you have a bigger stop loss, because you're very confident price is going to move in your certain direction. So for me, because I missed it, I waited for the next valid setup, which was the next session, which was London session. So I see price came with Frankfurt Open, took out the high. Then we started building this kind of liquidity, which on EURUSD happens a lot of times in Asia. You have something like this with an imbalance below. So it left an imbalance here, and then price was building liquidity. Price tried to push higher, it came down. London Open coming in, so most likely we're going to take liquidity. So when price came and took liquidity right into the imbalance, I went down the time frames, and I think I just directly executed on the 1 minute. So when I saw price London Open, I look at the first hour of London Open, as I taught you. Price came down, took Frankfurt low, played around a bit, came down. Here started to really range. Another important key on EURUSD, price when London Open is coming in and price is ranging on the 1 minute, something like this, inside an area of entry. So because this was the area of entry with the imbalance, when price is ranging like this, usually means is going to move in the opposite direction. So you can just execute, have a bigger stop loss. In this case, I had a 10 pip stop loss just to cover some of the Asia low in case you wanted to wick it down like this and come back up, just in case. But I could have just used a smaller stop loss. But again, I used a bigger lot, so I like to give it some room to move. Because what usually happens when you have a range like this, price either just starts moving right away, or it can range, do a V shape, and then move from there. So I'd rather not get stopped out and re-enter. I'd rather just have a bigger stop loss and let the trade play out. And here, this was on, I'd taken the setup on GU, but this setup on GU I took on a challenge, which I passed. So again, the target was that break of structure, and because that was my target, just passed it. But you could have easily let it run towards that high, which would have been another 70 pips. So that's how you build a trading idea from scratch using the daily and 4-hour time frame, which is very, very important. So that's why I wanted to make this video, break down this trade and how I use the daily and 4-hour time frame, because it was just the best live example that I took, basically the setup that I've been watching for the last couple of weeks. So please remember, always use the higher time frames. Daily and 4-hour usually dictates what's gonna happen, especially when you can look at candles before they happen and you can anticipate where they are gonna go based on their closure, right? So daily, you see how daily kept rejecting down. I'm anticipating the next daily candle to push up. Why? Because we had the confirmation here and Thursday is coming in, so I can imagine the candle closing somewhere around here, and then the next candle can wick down and then continue bullish. Why? Because we are making that impulse, we're making another break of structure, so the impulse can push price higher. So that's how easy it is to trade the higher time frame and use the higher time frames in order to form trading ideas.